Let's get a deeper dive into the action with our market reporters. I'll start with you, Abigail. What are you watching?
Well, Taylor, this may come as a surprise because there's been one area of the equity markets that has outperformed, and that is, surprisingly, EM. Take a look at this. The emerging market index down just 0.5%, outperforming in a huge way the S&P 500, along with the SOX on pace for having its worst day since May. The same thing for the Russell 2000. And since the EM equities further out in the risk continuum, it seems shocking that they're not actually selling off more. But the answer may lie in this chart because EM has been underperforming for some time. This is a year-to-date chart that we've looked at before. In blue, we have the EM equity index. In white, we have the S&P 500. In yellow, we have the SOX. So the SOX has been outperforming. The S&P 500 stuck in the middle. But EM, for quite some time, up until April, had been nicely higher on the year. And then there were liquidity issues with China. We see EM dropping to some degree. The SOX taking back off. The S&P 500 as well. EM, though, has been flirting right around even for quite some time. This just may be a bearish tell on what's ahead for both the S&P 500, the SOX, and the broader equity markets. Renita.
Abigail, I'm taking a look at gold, which is extending earlier gains, of course, as investors worry about trade and the Fed. Now, they piled into this safe haven along with others, as you reported earlier. Fed Chair Jay Powell said the U.S. economy faced, quote, significant risks from slowing global growth. That actually bolstered expectations that the central bank will cut interest rates further in the United States. But earlier, the U.S. dollar, or not the U.S. dollar, gold rather, rose after China announced those plans to impose additional tariffs, and gold has been relatively steadily increasing during the year and breaking far past that $1,500 an ounce level.